We're having a discussion on tax function in the future, and one of the key things a lot of organizations are focused on is how do we execute tax reform as we head into the first full year end, especially for calendar year filers in executing tax reform. Justin, maybe take me real quick through the international provisions. What are the big things that organizations got to focus on?
Companies they're observing right away through the past 2 quarters and getting ready for year end that these international provisions are complicated and interrelated. You cannot make decisions to model in a silo. You cannot perform a GILTI calculation separate from an FDII calculation, separate from an FTC calculation. You have to do them all in unison because they could potentially impact one another. The question that then surfaces after that is what's the right medium to do these calculations? Is it going to be in Excel? Is it going to be some sort of new technology like Alteryx? Or are you going to outsource with a third party? We have our own tool. We leverage Beacon. It's our own interrelated type of calculation that allows us to program these rules and do modelings and scenarios. But that's the 2 main groups: complicated interrelated calculations and leveraging the appropriate resources and technologies.
April, one of the big things feeding into that is fixed assets. So maybe talk about what are the keys around fixed assets and depreciation considerations when we think about executing tax reform.
Yeah, so I would say there's 3. The first is making sure you're aware of, obviously everybody's aware of full expensing, but are you aware of the rules around qualified improvement property and the fact that that definition changed for us in 2018? The second would be making sure that the data is available for all of the new pieces that you need, whether it's QBI from a domestic perspective for FDII or QBI from a foreign perspective for GILTI purposes. And then watching out for permanent impacts from fixed assets. We don't normally think about fixed assets causing permanent differences, but they certainly can now under this post-reform world that we live in where everything is interrelated.
Rick, we got to end with tax accounting. What are some key tax accounting takeaways?
So in the discussion thus far this year has been a lot about SAB 118, a lot about various developments and how to account for them. But don't get lost in what little time we have between now and the end of the year to think about some of the complexities that we just talked about here and the need to build that into the tax provision for 2018.
Yeah, great points. Thanks for listening on our quick discussion on tax function in the future, executing tax reform.